And I know one of the things that you've talked about in the past a lot about is impact investing, and the political environment's really heated today, to say the least. And there's a lot of moving parts in the economy. What is your thinking about the place of impact investing and how JTC is currently engaged there?
Yeah, impact investing and this bigger idea of just helping well-intended investments ultimately do the good they're intending to do is fundamental to our core value as it is to JTC. To your point about the politics and the political environment, this pandemic has obviously become very political, but it's highlighted some real challenges in certainly in the United States in terms of distressed communities and disparity in wealth, and it's highlighted similar things around the world. And so the need for impact investing is real, and it's not just a U.S. phenomenon. I mean, this is a global phenomenon. And so impact investing is a great example of the sort of our approach to market and how JTC can ultimately differentiate. So we really approach it from the standpoint of, there needs to be aggregation of a ton of data to truly do a good job at impact investing. There's so many, or impact tracking and reporting. There are so many elements. It's extremely complex. And so when we went to looking for a way to deal with this market, we started looking for a common sort of reporting methodology that we could algorithmicize, if that's a word, right?
A great word.
Yeah, great word. What we found, Kevin, was that because of the complexity of dealing with a lot of this data, what folks had really done, that the offers out there on the market are largely consultants that write impact reports for clients. So a client would hire somebody to write an impact report, and then the impact report is tailored to that client, of course. So from our standpoint, that's a valuable service, but it's kind of high end, right? It's burdensome. It costs a lot of money, and it's really, you can question how objective it is at the end of the day. So our approach was to look for something that we could, as I say, program to. We found this model with Howard Buffett, who's the grandson of Warren Buffett, and we partnered and collaborated up with Howard. And so what we're doing is taking mass quantities of data that we're gathering anyway because we're doing the fund administration work, and driving that through an algorithm which Buffett invented that allows investments to be compared one against the other in the same way you might compare a return on investment and a capital IRR. In this scenario, you're able to evaluate a little IRR for impact rate.